Well, here we go. The stock market just wanted to give us one last Christmas present, didn't it? You know, when you've been beaten down all year, it's been an ugly year in the stock market. It's been tough. It's been the worst stock market in 14 years. And you know it's been a tough time. And you think, okay, that's it. Let's just see us into 2023 now. Let's get ready for a new year. Let's hope that we get things moving into a better direction next year. And the stock market just comes back with just one last kick. You know, when you're being beaten down, just give you one last kick. And that's what it felt like yesterday. And in fact, the whole of December. When you think you've just had enough, you think the market is gone, right, we'll leave you alone for a little bit. It gives you that last kick. And oh my, it's been a brutal year. But this December has just topped it off. I mean, if we look at the S&P 500, it's down 5%, and if we actually go from the 1st of December, the S&P is actually down 6.2%, and the Nasdaq, the Nasdaq is down 33% year to date. We'll talk about a tough year. You know, you imagine this is the Nasdaq. This is the Nasdaq made up of 100 companies, a relatively safer investment. And then you actually start looking at some of the individual stocks that are in here. You know, some of the individual stocks that are in the Nasdaq are down 40, 50, 60, 70, 80%. Unbelievably tough year. And you look at the same, what we just talked about, the S&P 500. You look from the 1st of December for the Nasdaq. The Nasdaq's down 9%. At one point yesterday, the Nasdaq, until we had this little bounce up before the close, we were talking about the Nasdaq was having a correction in December. Talk about being a tough year, and then you have another correction in December to top it off. I've been absolutely brutal. And the thing is, you heard a few people started talking about, could we see a Santa Claus rally? You know, there's this theory that is it's been kind of proven that when we get into December, we have what is called a Santa Claus rally, and stocks tend to do okay in December. There's a bit of variation on the actual dates of when the Santa Claus rally is. Some people say it's after Christmas, some people say it's before Christmas, some people say it's the full December, but there tends to be a optimism in December where we're moving into the new year. Everyone's kind of in a good mood because everyone's, you know, going to be on the holidays. Everyone's in it having a good time, and the optimism around a new year, and you tend to see what is called the Santa Claus rally. Well, I'll tell you what, guys, we're definitely not having that this year. It's been a tough December, one of the toughest months throughout what's been a horrible year, so it's been tough. And then you look at the likes of Tesla. You know, we've been covering this one for a while recently, because it just seems to be massively falling down really since September time. You see, you know, down 58% in that time period, and you just think it can't get any worse for Tesla. And look at the downtrend that it's on. It just goes lower, lower, lower. You know, in 1 month we talk about Tesla, it was a 500 billion market cap. It's now 392 billion market cap. Then went and lost another 30% on the share price. Like, it's insane, some of the moves. And it's not even just some of these high spec plays that are losing this much value. You know, the likes of Google. I mean, even Google just keeps getting dragged down more and more. And, you know, Google's having a correction this month. That's down, 10% at the moment. And year to date, Google down 40% year to date. You know, you would say Google is one of the safest stocks on the stock market. And even in here, you would have been open to volatility. You know, down 40% is brutal. Amazon. I don't know Amazon. I personally think there's a few more big tech stocks out there. But if I weren't in them other big tech stocks that I think are better opportunities, you're looking at Amazon. It's now $83. You know, you're talking about prices it was at in 2018. Amazon. And you look at the financials of the business since 2018. You know, if you went to someone in 2018, if you went to someone in July 2018 and just said, just let you know, Amazon's going to be the same price in 2022, 4 years time, you'd be like, no, like, you look at the financials, yeah, it's going to be a lot higher, and it's just been absolutely beaten down. So, I mean, take your pick on stocks, because it's been a very, very tough year, and we'll see what the next year has for us. But if you've made it through it, well done. It's a little bit of a badge that you can say, you look back at. Without doubt, we'll mention this time period in future years and go, do you remember the 2022 stock market crash? Like, that was a brutal time. It'd be one of those times that you'll reference a fair amount. So yeah, if you have made it through, well done, and we'll see what 2023 has in store for us. Now, why is the market struggling so much? You look at the stock market, especially through December, you're like, why is it struggling so much? And there's really not any clear thing to pinpoint of what's causing it. Funny enough, I looking at the jobless claims, I think, as I've said previously, for me, one of the major things that will cause a massive recession, you're starting to get to the levels of 08. You see in 2008 mentioned so much, and even though the share prices at the moment are downtrending to like a crash in them sort of levels as an 08 crash, in my opinion, we can't see an 08 crash until if we had massive job losses. That is the only way we're going to have a major recession, is if people lose their jobs. There's a difference between where you're in a position where consumers are having their spending squeezed, and there's a big difference between they've got no income at all to go spend. That's the major issue for the economy. And if you look at the jobless claims, they were actually lower than expected. So they were expecting consensus to come in at 222, and obviously they came in at 216. So jobs at the moment, as we've spoke about earlier, are still holding up okay. Also GDP growth, that was unexpectedly upwardly revised to 3.2% in Q3, and the previous expectation was 2.9%. So obviously the US economy at the moment is growing a lot faster than what is expected. We know the US economy is a little bit more resilient than the UK economy, but even then it's still holding up really strong at the moment. And at the moment it looks like the consensus is Q4 could be particularly strong as well, stronger than what's expected. So you look at this at the moment, you're like, yeah, you've got everyone talking about a recession, have all this fear priced in, but jobs are still holding up okay. You look at the GDP growth, there's some pressures out there at the moment, but even that's still not too bad at the moment. We look at inflation, the inflation data that we had recently was still pretty good for us, and you'll see here that inflation was coming down and we had a major drop. So we look at inflation's coming down faster than what we were hoping for. That's obviously a positive at the moment. And the only thing that really went against us is really this month is the Fed. We thought that the Fed were going to do a 0.5 rate hike, which they did. The only thing that happened when the Fed came out is they basically came out and said, we have no intention of slowing down anytime soon, which we thought was going to happen. And if anything, we could actually see a few more hikes. And obviously the market didn't like that. The market did not like what everyone is worrying is that the Fed are going to go to a point where they keep these interest rates hikes up for too long, or a higher rate for too long, and then that causes a crash in the economy, and that's what everyone's thinking. The Fed are going to overshoot here, and that's the worry that everyone's pricing in. And it looks like really, even though there's still very strong data out there for a lot of businesses and the economy, it just seems like investors and Wall Street are trying to panic the Fed into slowing things down and saying, okay, it looks like things are slowing down, even though the data says, clearly it's not happening. Jobs are still holding up okay, the economy's still holding up okay. So the Fed are like, we can afford to do it. But it seems like the stock market and Wall Street are trying to just send a picture to the Fed and Jerome Powell, like, no, it's not okay. You need to start bringing these interest rates down. So it seems like there's a little bit of a game going on at the moment between what is the Fed and the interest rates at the moment. And it's one of those where I'm seeing it more and more. There's a lot of people out there, especially now, the negative tone out there. The negative tone out there at the moment is there's going to be a big recession, a major recession, and potentially a bigger stock market crash. And you're starting to see that mentioned more and more. It seems very high at the moment, where there's a lot of that fear being said. And I think when you look at it at the moment, and my opinion as well, is that we're still not quite close to having a big recession. Like, I think we will have a slowdown. I think we could potentially have a bit of a light recession. But when we talk about a 08 type recession and an 08 type recession getting priced in, I just can't see it at the moment. And I think it's one of those where, and if you've not seen it, there's a show on BBC. BBC, you can go on BBC iPlayer and watch it. It's called Traitors. It's a fantastic TV show. If you're stuck for something to do over the Christmas period and you want something to watch, I think it's like 11 episodes, 12 episodes long. It's a really interesting watch. I found it really interesting. But it's like the human psychology at the moment is that what you'll see is that if someone or enough people or the loudest people shout something loud enough, it'll get people to to follow that. And if everyone starts shouting recession, recession, we're going down, even though it's not right, if there's enough people shouting it and the people that are the loudest are shouting it, everyone kind of goes, oh, okay, there might be a recession. Everyone kind of follows it, and you see that everyone's starting to price in that recession, even though it's not really going to happen, but then it gets priced in because so many people think it's going to happen. You know, there's a feeling that, and the same happened in 2020 when we were going into 2020. People were like, well, it's been 10 years since we last had a stock market crash, a recession, so we're due one. And if enough people wish it, you know, it eventually happens. Now, funny enough, that's when the CV dip happened, and that talk of a recession, and it's been 10 years since we last had, it's the longest time since we've last had a recession and a stock market crash, we're due one. You know, if enough people kind of think it and say it and wish it to happen, it'll happen, even if it's not the correct thing to do. And to me, it feels like there's a little bit of that going on, is that because so many people are wishing for the negativity, wishing for a crash, a lot of people are wanting the Fed to pivot so much that they're putting this fear out there, that there's a little bit of that element kind of going on as well. So yeah, I mean, it's been a tough December, and the reason why I don't think is anything because there's any kind of deterioration. I think it's just, most of the time, I think it's just pressure now building on the Fed to chill out a little bit. there's no way of saying it. I think there's a lot of pressure building on just for Jerome Powell to come out and say, okay, you know, the economy is deteriorating a little bit. We don't think we're going to hike up interest rates a lot more, and in fact, we could see us bringing down these interest rates in, you know, 3-4 months time. You know, if they came out with that tone to the market, I think we wouldn't see this negativity. So I think that's why it's only building at the moment. But hey, that's where we're at, and obviously it's been a tough year, and obviously just to top it off, this month has been an ugly month just to add for things, and let's hope for a better 2023 anyway. So well done for you guys that have made it through the year, because it has been a really tough time. So on that note, that's probably going to be me done for Christmas, unless I do a video tomorrow, but I don't think I will. So have a good Christmas. I'm thinking personally myself, going into next week, I'm kind of debating having a week off from making YouTube videos. At the same time, give it 3 or 4 days, I might get a little bit bored and I might do YouTube videos. So I'm just going to let you know out there that don't be too surprised if you don't see me for a week. It's something that I'm thinking about, and it depends on if we have some crazy news articles. I might pop in for 2 or 3 videos. So it might be, next week might be a week where I do some, you'll see me do a few less videos than normal, or you might see me totally disappear. So I just thought I'd let you know that, so you don't worry where I've gone. So yeah, that's my kind of plan over Christmas anyway, so we'll see what happens. And if not, then I should be back in 2023 if you don't see me, but we'll see what happens. I'm also trying to line up some specials as well, potentially, so we'll see if that happens. So yeah, I'll at least say have a good Christmas, and I might see you after Christmas. If not, have a great new year as well. And if you are on the Patreon, I will still drop at least one exclusive video before Christmas, which will be the stock request, and I'll try also potentially get one more video before the new year on there as well for you guys on the Patreon, so you guys know about that as well. So yeah, thanks for watching, guys. Thanks for watching all this year as well, and all support as well through what's been a very tough time. So yeah, thanks so much, and I'll catch you in a bit.